Hey, everybody. Welcome back to Subject to Change, a podcast where we discuss your financial questions. I'm Chris.
And I'm Nick. And today we have a question from Reddit from user Necessary Lies. So this question starts with, is there any advice out there for finding a financial advisor? I know, Chris, you probably have some experience with this. So the question is, I have a reasonable emergency fund and some investments, which I could probably be a little better about managing, and I likely have some more income on the way. Hopefully everybody has a job and more income coming in. I co-run a small business, which consumes all of my time. Working with a financial advisor seems like the best option that I've got to try and get my financial house in order, but right now I'm just randomly Googling things. Is there any advice on who I should be looking for and what I should watch out for trying to get a financial advisor? So, Chris, I feel like I'm going to pass this over to you because I know you have experience in this world and you probably have a lot of great insights.
Got a little experience.
Just a tad.
Yeah. So, good question. And I think out there, a lot of people are thinking, if you haven't worked with a financial advisor, is this the person who's going to kind of help me put my finances in order? Am I going to get good financial advice, maybe good investment advice?
Right.
And that's, a lot of good questions that are out there. And it's not a one-size-fits-all approach. Certainly, there are different advisors that exist in the world, and there are different types of people and what they want out of working with a financial advisor. Have you had, I guess I got to ask, have you had any experience working with a financial advisor, Nick?
Yes and no. Not, that's a nuanced answer, but not personally, but my wife has worked with somebody and has worked with somebody for the last few years before we had gotten married to help her manage some of the investments that she was making. So yeah. I've talked to her about talking to a financial advisor, but not personally.
Yeah. So I think in an ideal world, we would love to be able to just take 100% of our finances and just turn it over to somebody and go, hey, take care of it for me. But
that sounds great.
The reality is, yeah, right? But the reality is that it's your money, right? So you're going to be the most vigilant person about your own money, more so than anyone else. And while you can transfer the fiduciary responsibility, and that's a really fancy legal word for somebody who is taking your best interest at heart, like you can transfer that over to a financial advisor in some capacity. At the end of the day, it's still your money. It's not their money. But let's break down what a financial advisor is and what it isn't. There's a couple of terms out there that we'll want to discuss, just so we're all on the same page.
Yeah, I was going to ask, I know I've seen billboards and ads on TV about financial advisors and financial planners and investment I know in my head they're all kind of somebody that you give your money to, but I wouldn't be able to pick apart the specifics about what a planner does versus an advisor or that. So I think that's a great place to start with. Just what is the nomenclature around financial help?
So there's really two basic types of people. And it's not necessarily two different basic types of people as much as it's two different basic ways of paying for something. Because anytime you're asking for financial advice or financial information and you're wanting to get an advisor, they're going to have to get paid somehow. So are they getting paid from you directly as a flat fee for services, much like you would pay an accountant or somebody to do a service for you? So you pay them a flat fee, $500, $1,000, whatever the arrangement is. That individual has no incentive when you pay them a flat fee to kind of do anything where they could earn additional money based on types of investments or types of strategies that they're putting you into, because they're just earning a flat fee. And oftentimes folks who are earning a flat fee are considered a fiduciary for you. They are actually, taking on part of that risk of saying, I'm going to take your best interests at heart. I'm sitting on the same side of the table as you. The other way that financial advisors get paid is through a percentage of the assets or a commission on the investments that they're selling you. And oftentimes they're working in more of a broker capacity. So they are recommending investments to you because they believe that those investments are the best things that you should get based on the information that they have, but they don't necessarily always have to take your fiduciary your fiduciary position at heart, because if they're acting in a broker situation, they're earning a commission for making that investment, much like a real estate transaction or a car transaction. And so they're just getting paid for facilitating the transaction. And so it's very important that when you look at doing some type of financial planning or financial advice, to understand what type of person are you working with. Are they getting paid in a flat fee portion where you're paying them directly, or are they getting paid somewhere off the investments? Now, there's this third one that sometimes plays out where someone goes, well, I'm free. You don't have to pay me at all. But the problem is when anyone tells you that they're free or that their services are free, that means the fee is baked somewhere into the thing that they're giving you. You ultimately become the product in some way. And that could be in a commissionable way, or maybe they're an hourly employee that's working for an organization where you hold an account and there's account fees that are baked in, or there's other investment fees that might be baked in. And so you really need to understand the relationship between the individual that you're thinking about working with and how they get paid. That's the first thing. The second thing is understanding, are they going to be a fiduciary? So you want to ask that question straight out. Are you a fiduciary on my behalf? That word really comes from the idea that somebody is acting in good steward for you. So you think of like a trust, or somebody who is entrusted to kind of carry out the thing that you're asking them to carry out on your behalf. Could go into a little bit of a history of like where this word comes from, but think about like a regent for a king. If the king was gone and you had a regent there, the regent was the person that made and did the things on behalf of the king. And if you didn't do the things on behalf of the king, well, there were probably pretty bad consequences, right? And so the same is true here today. Like if you're a fiduciary for somebody and you're taking on that fiduciary capacity and you don't actually act on their best behalf, you're acting in your firm's behalf or your own behalf, then that investment advisor could get into a lot of trouble. So it's important that you know whether or not they're acting in a fiduciary capacity.
How is that measured? Is there somebody could say that they are, right? I have your best interest at heart, but is there a guidebook to say like this person is making the best decision for you? Is that a subjective? How does that work?
Well, I think it comes back to the compensation. So if I'm not receiving compensation from the types of investments and things I'm recommending, then it's easier for that fiduciary relationship to take place, or to know that there's full transparency there. But also, how do they come to their decisions? Did the individual just ask you a question and then basically make a recommendation, or are they really truly understanding the ins and outs of why you should be doing something that you're doing? So they understand you like you understand you. So how much information do they have in order to make the decision? And then, the types of recommendations that they're making. That would be something that I would look at as well. Are they making recommendations that seem to always align with, their firm or the name of their firm, or is it open in terms of the different types of investments that they're giving? So maybe they're offering a third party of investment even though they work for another investment firm, or maybe they're not even attached to an investment firm. That might be the best way to think about it, because then there's really a separation between the person giving the advice and where the investments are coming from. So it can be tricky, but ultimately, I think it boils down to the legal documentation that you have. If you're going to do business with this person, is there a contract in place? Is there some type of thing that they've signed and you've signed that states that they're going to take on this fiduciary responsibility? Because then they're going to have to back that up because it's in that contract. So let's talk about the different names, because you had mentioned financial planner, financial advisor, investment advisor, broker, investment broker, lots of different names that are out there. So there's a designation that exists that's called the CFP, or the Certified Financial Planner. And that designation is typically reserved for people who are certified financial planners. And what that means is that they've been trained essentially to take a holistic view and approach to looking at your financial well-being and creating a plan for that financial well-being. So if you see somebody who is a CFP, that CFP designation is just saying that the CFP board has essentially accredited them with this designation because they've passed the rigorous exams in order to kind of have all of the knowledge to be able to give you a certified financial plan. But you might have other folks out there who call themselves a financial planner who aren't a CFP CFP. Now, it doesn't mean that they cannot give you financial advice or instruction. It just means they haven't gone through the rigorous testing for the CFP designation. Maybe they're in the middle of it. Maybe they've chosen not to do it for some reason. But that name, financial planner, can be used by anyone just for the mere fact that they're providing financial planning advice. Now, in the state that you operate in, they will need to be registered as some type of registered investment advisor or RIA or some type of financial planner. And so you need to know kind of the state rules, but there's a state regulation for them to be registered. And then if they are selling investments in any way, they have to be registered with an organization called FINRA, where you can go online and do a broker check to see if they have you might have heard of a Series 7 or a Series 66 license or something, where that individual has been licensed by FINRA, which is the body that kind of governs the investment world out there in terms of if people are licensed to sell investments. And there's different types of licenses for different types of people, but you can go online and put in someone's name and do a broker check for them to see whether or not they have a license, what type of license they have, and then if they've had any type of derogatory remarks onto their license. So if they've had any issues in the past that would have been marked up, you can find that inside of the broker check as well. So if you do a quick Google search for that, you can also look up that broker. Now, that's when you have that type of license, you've heard me use the term broker. So typically that person who is registered is able to sell an investment to receive a commission. And so that's a broker. So if you have a CFP designation, certified financial planner, but you are not a broker, then you're not going to be able to receive commissions because you're not licensed to receive commissions, but you can charge a flat fee as a CFP if you are licensed through the state as a registered investment advisor. So I know that there's some different types of nomenclature here, but it's important to note that really there's two distinct categories of how you get paid. Is it a broker, commission-based, or is it a flat fee, which is more of a registered investment advisor, an RIA type of broker?
So it's possible to be kind of, I forget how that analogy goes.
It's possible to be all of them
right
at the same time in reality, but what's most important is how is that individual working with you? So when you engage them, what's the relationship in terms of the compensation with that particular individual? That's what's going to denote the type. And if you don't have anything, then you can assume that you're operating in a broker capacity, right? Because the transaction is going to happen when there's a fee that's exchanged through the buying and selling of an investment. So lots of different names out there, but how do you pick one? I think that was the question. I mean, now that we've kind of just kind of talked about what types are out there, how do you pick one? And that's going to boil down really to what it is that you're looking for. What type of investor are you? And, how much in assets do you really have to invest? So if you're looking at solely trading stocks and bonds and investments, mutual funds, ETFs, then, and a lot of the information, then it may be helpful for you to have somebody like a broker, right? Because you could be buying and selling and getting just paying a commission anytime you buy or sell the investment. You might want to use a large brokerage organization. You might have heard of different ones like Fidelity or TD Ameritrade. There's lots of large brokers that are out there that have commissionable trades, and they have people that you can talk to on the phone, right? And so when you say my broker or my advisor, you could be talking about that individual. But let's say you have a large, complex financial issue. You have some money, maybe you've inherited some money, you have a business, you're trying to do some planning as well as some financial stuff. Well, then you might want to utilize the services of a larger firm, because a larger firm that has lots of these types of individuals are going to be able to give you access to not just more investments, but also more knowledge in terms of how to structure the financial life that you're trying to put together. So the complexities often ask for somebody who has more information. And if you're just looking for some financial literacy or a financial planner, then it may make sense to just go find a financial planner that you can pay a flat fee to, where you're not really concerned about the investment portion as much as you're concerned about making sure you get the planning down. And if you're trying to be completely, unbiased on each side, you can always meet with a financial planner and get the planning done first and pay a flat fee, and then take that financial plan and execute the investments yourself or with an advisor where you are paying the lowest commission possible, right? And sometimes the planners can even help you do that. So it's important to understand the different types of relationships that you're looking for, because that's going to help point you in the right direction of, am I looking for the most low cost access to investments? Probably a discount broker, a Charles Schwab, a Fidelity, someplace where you can just get access to investments because you're really interested in that. But if I'm really looking for financial planning, I probably need to get a CFP or some type of financial planner who's a fiduciary, who's taking my interest at heart, who's really looking at my life in a very holistic and complex way, and helping me put together the plan that's going to make sense for me to execute at the place where it makes most sense to execute, where I'm gonna be saving the most money and saving the most time. Wow, so that's a lot of information.
That's what I was going to say. There's a lot of moving parts to an answer, kind of depending on what you need. And I think I feel like a broken record sometimes on this show. There's no one answer that ever fits everybody, right? It always depends on this person's needs. So this person asking here on Reddit, they run their own small business. They're trying to figure out investments, maybe a little bit of financial planning. And it sounds like there's different camps of, like, maybe you can go and start with hiring a certified financial planner to help you just come up with a plan that includes, financial planning and investing, and then go to one of those brokerages, like you said, Fidelity or Charles Schwab or any of the commercials you've seen, and then talk to somebody there about helping you execute that investment strategy, or talking to them to maybe even compare notes, if that's an option, to see what the recommendations are.